I'm thrilled to say that we have Samantha LaDuc of LaDuc Trading. She is the founder. She is joining today for Options Insight. And Samantha, let's start with what we're seeing in big tech. I look at the NASDAQ 100. It's up about 4% over the past 3 weeks since March 8th, when we were really on the precipice of all those banking headlines. What's going on underneath the surface of this rally, and how sustainable is it?
Well, on the surface first, it's very abundantly clear that NASDAQ, Bitcoin, gold love looser monetary policy. And the bank bailout that we had on the 12th has definitely, stemmed this bank run and given the impressions of a durable bull rally, not just in tech, but in the market health has been restored. The problem that I have with that is two-pronged. Number one, underneath the surface, there has been a breadth destruction. There has also been a sold to you feel of this, which means that I expect there to be an air pocket of risk. So this exuberant momentum rally that we've actually had off the October lows, which was central bank intervention at its finest, like $1 trillion collectively between Fed and SNB and China and Bank of Japan, we have basically just pulled forward the Fed hiking regime again after yesterday's Powell testimony that they're raising 25 basis points. They've got another one scheduled. And the longer that they hike, the more likely that we are going to have a deflationary hard landing. In fact, on the 7th of March, I had a credit indicator of mine that I use that spiked higher. This was even before the Silicon Valley Bank failure, that indicated that we were going to have a credit event coming up in April timeframe. So I'm actually bearish and looking for a nice turnaround in this exuberant tech rally.
Okay, Samantha, so a potential credit event coming up in April. It's March 23rd right now. How do you prepare for that? What's the trade around that?
Well, currently there is this, infamous kind of JP Morgan caller, selling calls at 40.65 and then buying a put spread that's right around that 3,600. And some were hoping that would manifest by the end of March, March 31st, end of quarter, before they roll that. More likely that's going to hit that 3,600 level in April. That's my baseline bet. Now, again, I have been very much watching this exuberance in both tech and semis. I believe very much that this is going to be petering out. Nothing has changed my intermarket relationship analysis at all. Last time I was on, I mentioned the dollar yen getting rejected at 137 would be very gold bullish. I think that that's going to fall further. The dollar yen breaking 131 is going to not only further support this gold run, but also bring bonds with it. So I'm actually looking for this deflationary line in the sand, meaning we break the 10-year at 3.33%, equities come under distribution again, and bonds move higher. Right now they've been moving sideways in kind of a snaking action with the dollar, but I think that's going to change in the next few weeks.
All right, Samantha, great breakdown. We'll have to check in with you again soon, maybe around that credit event in April. Really appreciate the time. That is Samantha LaDuc of LaDuc Trading. She is the founder of that firm, for joining Options Insight today. From New York, this is Bloomberg.